And what we've experienced and the country has experienced significant inflationary pressure on everything we do, and we've also added to that with our cost of reinsurance. And that's really had a big impact on us and our customers for the last couple of years. I mean, what I've also talked about today is sort of the outlook on that is a lot better, a lot more favourable for customers. And we're really seeing inflationary pressures come down. Cost of reinsurance is sort of neutralising, and that's that in the go forward, that's going to be reflected in sort of pricing going forward, which is going to be good for customers.
So Nick, what drove the premium increases? As you say in your results, there were fewer payouts or claims for natural disasters, and IAG benefited from more favourable weather.
Yeah, I mean the past has really been driven by, I mean, we had the same challenges other businesses and the communities have had in Australia and New Zealand. We've had just significant increase in costs. And anything we repaired, building industry, building supplies, repair costs, motor parts, everything went up, plus reinsurance. And really what I've said today is that's sort of stabilised a lot. And so that in the go forward in pricing, that's going to be reflected in the go forward pricing.
So Nick, it's been interesting looking at the ABS inflation figures. So in the most recent quarter, December, insurance inflation went up 11%, and in the March quarter of last year, it got as high as 16.4%. So do you think the wider insurance sector bears some responsibility for the high inflation that a lot of people had to endure?
Yeah, I sort of feel like it's slightly the other way around, actually. I mean, the cost of insurance, unfortunately, is reflecting the costs of what's happening in our country, the costs of repairing, labour costs, the procurement of parts for motor, the building supplies required to repair a damaged property. In addition to that, we also had this other thing, reinsurance, which dramatically changed, which was really reflected of the significant number of perils that we've had in our country over the last couple of years. In a way, that's what's has driven the cost of insurance, those things. As those things are changing, which they are, that's going to be then reflected in the cost of insurance. And so just on the way you described that, I would expect the next 6-12 months to see the inflationary impact of insurance reduce.
So Nick, on that point, I noticed that IAG's insurance premiums, they went up about 6% for the half year, which is a noticeable slowdown compared to the same period last year. So can customers expect their premiums to rise, have smaller rises going forward?
I mean, I think that, on average, this is an on average comment across the 8 million customers that we have. Yeah, some of that inflationary pressure that we've seen, of course, that won't be for everyone. There'll be other factors that will come into this, but as a theme, yeah, that's what we should expect going forward. Not just for IAG, by the way. That would be a view on the market generally as well.
Now, Nick, I have to ask, last year it was reported that your pay went up by 78% to more than $5 million. So how would you justify that while also, I guess, significantly increasing the premiums for customers?
I mean, I won't comment on my pay directly. I mean, what I can say is we continue to run, we've sort of got a theme that we've been working on at IAG, a program of work that is sort of simplifying the way we run IAG. The country needs IAG to be strong, so there's an appropriate return we need to make, sort of because we play a pretty important role as sort of a shock absorber. And what we can say is the way we're running IAG, the way we're looking at our costs, the way we're engaging with our supply chain, that I do see that inflationary pressure coming down, and sort of the go forward impact to our customers is more positive than it was 6, 12, 18 months ago.
And lastly, Nick, how concerned are you about the stance that the US government has taken on climate issues? For example, the Trump administration has pulled America out of the Paris Agreement. Donald Trump has referred to climate change as fake. And in relation to the oil industry, his mantra is drill, baby, drill. So how concerned are you about what this means for climate change and insurance going forward?
Yeah, I mean, we're focused on Australia and New Zealand. I mean, we strongly believe we're seeing an increase in frequency and severity of events. We can evidence that. The view is that's climate change is driving that. And so what we need to do as a country or countries, Australia and New Zealand, is face into that. That is a risk that we are exposed to. We know in Australia and New Zealand we've built communities in places that are exposed to risk. We need to make sure we don't make more of those planning decisions, because that risk is not coming down, it's going up, as well as at the same time, where we have done that, sort of strengthening the resilience, investing in mitigation to strengthen the resilience of those communities. I think we just need to, we need to focus on that. I mean, that is what Australia and New Zealand look like over the next 50 years if we don't act, and we are acting, but we just need to continue to act to strengthen the resilience of our country. This is an important topic for us.
Well, Nick Hawkins, thank you very much for your time.
Thanks, David.